Good morning. This is Jason, aka Junky. I hope this video finds you doing well. It's Tuesday, January 29th. Time to do another market analysis, take a look at the market and see what direction we think it's going to go. And I want to share some information with you today. I want to show you my results so far this year because I want to make a point about trading. Real quickly, anyone watching the video, please subscribe to the channel, obviously, but follow me on Twitter. I put my Twitter handle, it's @CryptoBitJunky. I'll put that in the information box because we're going to go live this week. We're going to go live every week, and when we go live, we go over the charts, and you can join the chat, tell me what chart you want me to break down technically, and I'll do it on the live session. And I announce what time I'm going live on Twitter, and I never really know when. It depends on my week. So right now, I don't know exactly if it's going to be tomorrow or Thursday. So follow me on Twitter so you'll know ahead of time. All right. Now, looking at the market, broken record. I've been saying the same thing for, it looks like, almost 2 weeks now, that we're in a area that historically provides a lot of resistance for the market. This is the S&P 500, the SPY, and this kind of consolidation can be a bullish kind of a pattern. This could be the fake out. I mean, there's a giant range of resistance here. Anyone that's been following the videos, the red lines in this area here represents monthly resistance as I identify it, and this represents weekly resistance as I identify it. And so this entire zone for me is resistance. So I would look for no buying opportunities here, but this absolutely does not mean that the market's not going to go up. I just wouldn't buy it because it's a low probability trading environment, you know. So but this is pretty bullish what I'm seeing here. We did get a break of the polarity change on a briefly going down. I actually sold this yesterday. I'm going to show you some stuff here in a minute. So I sold this on Friday. Yesterday was Monday, so I sold this on Friday. I didn't tell you guys on the video because I don't want to guide you, but I can tell you what happens after the fact, because, you know, just to show where I'm right and where I'm wrong. And I sold this, and the way I have multiple trading strategies, and that's kind of what I want to get into today. So one of my strategies had me in this trade selling, and I was out here, so it was a winning trade. You're saying you sold here and got out here. What's the point? Well, I'll show you the point in a minute, but this is kind of a bullish thing because markets typically so when it reaches a resistance area, it can do, you know, a couple different things. You can get a bounce immediately going back the other way, but when there's indecision in the market and there's not a lot of strength, I'll show you a chart. There's not a lot of strength from the seller's side or weakness in the market, and they're not taking control. So when it goes sideways and time goes by and you get that consolidation, it builds up more energy for a further move up. Now, with that being the case, they're still going to be in a resistance zone. It doesn't matter. I mean, it's going to have to go pretty far up to get out of the resistance zone. And a lot of the times, this is a bull trap. It tricks people into thinking. So you'll get a breakout going up here. Everyone jumps in thinking this thing's going to break out and it's going to go further up. But when you look at a weekly or monthly chart, let's back out. You look at a weekly or monthly chart, we've come down from all the way up here. You know, so you can trick people into buying here. Do you really think it's going to go all the way up here first without any kind of a pullback? But people don't look at the bigger picture a lot of the times, and this is why I impose the monthly and weekly resistance line levels on my chart to remind me, because I trade off a daily chart, but to remind me that this area exists, and to not get tricked into the bull trap that could be created here by the market breaking to the upside. Now, that doesn't necessarily mean that the market's going to come down and continue its downward trend and make new lows, but there's typically going to be some type of a reaction in this area. Historically, that's just what that's what the price does over history. So you have to be wary of that. And so I would not be a buyer here, kind of no matter what happens, unless price goes up here. And I'm pretty nimble, so I'm not, you know, I don't just have a sell bias. This is just a dangerous place to sell. If I was looking for a buy, I'd probably do it somewhere down here if I got the signal. So one thing in trading that I think is very, very important, and I was looking at my results recently, and it made me want to make this video. And I'm sorry if my computer fan just got really, really loud, but let me see if I can move it and get the heat down. So basically, Well, let's before I get into that, let's look at another chart. Let's look at QQQ. It's virtually identical. I don't have support resistance lines on this one because I don't actively trade this. So, but it looks pretty much identical. All right, so we're still in resistance area. They say that the Russell can sometimes be a precursor to what the market's going to do, but it looks pretty similar too. So I think in general, we're still in a resistance area. Proceed with caution. We're not getting a lot of sell signals. I didn't really have any trade setups yesterday at all, and it's been pretty slow. One thing that's been hindering me is the earnings season. I have 4 trades that I missed last week, all winners, by the way, that I couldn't take because they were too close to earnings, and I don't trade close to earnings. You know, once it gets within 5 days, 10 days, something like that, I stay away from earnings. Sprint was the most egregious chart that I missed. But let me see. All right, so when you're trading, you need diversification, not only in the asset classes that you trade, the sectors of the market that you trade, but in your trading style itself. Okay, so I'm going to show you my results for this year. I track. So this is my trade log for 2019. Okay, and if you want to be a successful trader, these are the things that you need to know. You need to, everyone, I believe, that's, if you're starting out, you need to trade a demo account first and foremost, because whatever trading plan that you're going to adopt, whether you learn it from someone else, you bought it, you went to some type of course, no matter what you learned, you need to apply it to the market first. And you need to go a step further and track your results. If you only have one trading setup that you trade, you run the risk of that trading setup not working. Remember, trading is a zero-sum game. There's always a winner. There's always a loser. So the people that you're competing against in the market are multi-billion-dollar funds. I watched an interview with Ray Dalio this morning. I love Ray Dalio, and I watch pretty much anything he's on. Him and Buffett. Anytime they talk, I listen. So, and he was saying that winning the market is to bet against the consensus and be right. You know, and my trading strategy, I'm always buying when the market is going straight down, and I'm always selling when the market's going up. I'm always doing the contrarian view, but you have to historically study the charts to know where the high probability bets are, because you don't want to do what the market's doing. And if you're doing what the market's doing, you're probably going to lose, because the people in the market, they spend hundreds of millions of dollars a year to do the research and to have the analytics and full teams of people to trade against you. And it's a zero-sum game. When you buy, someone's on the other side selling it to you. So you have to know what you're facing against, right? So these are my results. And the reason I'm bringing them up is I want to show you something. All right, so my win-losses for the month. Now, first thing you're going to say, this math is wrong. So let me explain this first. The BE means break even. So I didn't lose anything on the trade. If the trade goes far enough in the direction that I bought or sold in, and there's a point where I move my stop loss to break even, and if it goes back against that, I break even. I don't, so I don't lose, I don't win. So 6% of the time this month, that's happened. All right, so there's 32 total trades. So you got 17 winners, 13 losers. That's 30. 2 break even, 32. Break even 6% of the time. So how is this 57 and 43? That's 106%. Well, the reason is only the trades that close in a win or a loss do I track the win percentage. So 17 winners is 57% of. So there's 30 trades that actually were winner or losers. I don't count the break even in the equation. Okay, so that's why the win loss ratio adds up to 106. All right, but it's really 100%, 57 and 43. All right, so but here's my point. I have 10 different types of trades. And here's all 10 of them. And I know this is just jargon and won't make sense to almost everybody watching this. But the point is that I have 10 different types of trades, and I track each individual trade's historical performance individually. So that when I find trades that aren't working in the market, I can not take that trade, or I just want to know historically how that type of trade performs. Now, 5 and 6 are my historically most profitable trading setups, most profitable trading setups, and they would be the equivalent to buying the dip or selling the rally, right? Look at their percentage for this month, and it was even worse in December. 36% success, 40% success on these trades. And I'm trading with the trend, and I define the trend as the weekly trend direction or the monthly polarity direction if it's touched the monthly zone. So I'm always trading with the larger term trend. So I'm with the trend 71% of the time. I'm counter trend 25% of the time right now. And I've lost a large percentage of with the trend trades. And this is what most people say: trade with the trend is your friend, buy the dip, all the cliche stuff. Right now, the market is tricking those people, including me, and it's not performing like it normally would at those types of trades. And those trades historically have 60-70% win rates. The market is really funny right now. And if you track the different types of trades, you can find that. This is why you want to trade a demo account, because you don't want to just trade one setup. You want to learn how price moves, why you enter and exit your trades, and then track the results of those trades. And this is my version of this, and I tracked it all last year as well. But this is just a trade log for up to 2019, and I like to have a win percentage above 60%, and it's below 60 right now. Now, I did have 4 trades that would have been winners, and I didn't have any losers that I missed, and all because of earnings last week. So if I would have had those 4 trades on here, I just put them in a random spot, I would be over 60%, and this would look a little bit more normal for me. But you can't cry about it. You trade the market that you have. It'll be better next month, I hope. So right now I'm at 57% win, 43% losses. 6% of my trades go to break even, so that you can just count them as they don't count. But when I break this down, like for example, this trade type number 1 typically has around a 50% win rate for me. But my winning trade on average is 1.8 times larger than my losing trade. So a 50% win rate is still a winning strategy. So I keep the trade in the system, right? But the market is so contrary, and it's a counter trend trade setup. Well, the market's so random right now that this trade type is 6-0 this month. 6 wins, no losses, no break evens. Number 3, this one typically does pretty decent. One win. So my 7 trades that closed with a win or a loss that were counter trend have all been winners this month. Now imagine I only trade with the trend and I only trade pullbacks based off of a daily chart, retracement or something. If you only have one setup, that could have landed me in one of these situations where, I've got a losing percentage, but you have to trade multiple different types of setups because you want to diversify not just in what you're trading, but how you trade as well. It's important. And this is a winning strategy. I mean, my average, well, let's not get into some specifics of my averages, but if we were to do math, and you've got a strategy. Now, I will tell you my metric is my wins are typically on average 1.8 times bigger than my losses. So if I have 13 losses, and let's just say I'm at 1%, so I'm going to lose 13% on my losers. So if I'm averaging 1% risk on every trade, 13 losers, that's 13% in negative for the month. But if I have 17 winners and my winners are on average 1.8 times larger than my losers, that's 30.6. And then you subtract the 13 from that, and that would put me up about 17.5% for this month. Now, I'll be candid with you. I don't risk 1% on average per trade. I risk a maximum of 1%, but it's a little bit less than that. So, but it doesn't really matter. The formula here, if you have a strategy that your wins are 1.8 times larger than your losses, and you're at a 57% win rate, 17 and 13, you're going to make good money. Okay, so this strategy works, and it should be, like I said, it should be higher. Normally, I aim to be around 60%, and I have a few more trades than the 32 at this point of the month. But earnings season and the market's been a little bit funny. Last 3 months, the market's been really, really hard to trade, and I think I'm getting less than optimal results, but still profitable, which is great. But diversify in your strategy. Don't do just one thing, and track your results. You need to track your results, and you can't do that if you just learn a new course, put money in an account, and go trade it. You need to take time to do research. This trading is difficult. 1% of people are making money net of fees out there. It's the equivalent to being an NBA player. It is really, really, really difficult to be a good trader. I've been at this for 10 years, and this all this information here is the culmination of 10 years in the market. So it's not something you can just go buy from somebody and a week later you get in the market and you start making a bunch of money. That's a pipe dream. Okay, and if you guys want to fact check me, I took a picture. Now I'm very old school, so I track my trades like this, and I took a picture of my notebook. This is my notebook. Took a picture of this. This is this morning. I took this about 10 minutes ago. This is my notebook, and I have this notebook. All it has is all my trades. Every page in it, I write down my trades, and it'll show you the trade, the symbol, where I sold at, what my stop loss was, and over on the right you see what kind of trade it was. Number 6, number 1, number 5, number 9, number 8, number 6, and this is yesterday. I thought I was going to have a trade yesterday, and I started writing it in. I said, I'm not going to actually have that trade, so I scribbled it out. But and then if I lost it or won it, loss, win, 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 loss, 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 4 in a row, win, win, win. BE is break even, win. And you guys that are watching this video, if you want to pause it and then look these up, you can fact check me if you want, buy, at what price, and you can go back and look at it. But I keep a log every day of my trades, so I can go back at any time and see exactly what I did over the course of any 1 month or whatever, and I'm tracking my results so that I can modify things as I go. And it's important to have this information. I know that this number 5, number 2, and number 6 are the most common trades in my trading strategy. We've had virtually no number 2s because there's been no pullback in the market this month. And this is basically a counter trend pullback move. Normally this is up around 15-20% of my trades, and it's down at 3%. Okay, so it's a very weird month. And then these are normally my most profitable, highest percentage winners, and they're at 36 and 40% for the month. That's terrible. But that's not normal. It's not typical. But I don't know that that's not typical unless I keep records, unless I track my trades. I have historical data. And if you're going to be a trader, you have to treat it like a professional gig. And this is what you have to do to be successful, because it's super hard. You can't get to the NBA just having a decent jump shot. You have to get in the gym. You have to work harder than the other 5 or 10,000 people that are playing Division I basketball, and to make it to the league. And this is the same thing. It's really, really, really hard to be a successful trader. So you have to put in work. So I just thought I'd share that. You have to work. And like here's a trade I missed with Sprint. I would have been a seller here. This is a number 7 trade right here. I would have been selling right here on this bar, and I would have been out here. 2-to-1 risk reward. And but earnings is right here. So I didn't take that trade on Friday, and I missed out on it yesterday, closing it as a winner. And there's 3 other trades that are just like that. But you don't cry over that. You just keep moving, keep analyzing the market, keep doing what you're doing. So overall, the direction I believe is still down, higher probability down. It feels very bullish though, what's happening. But I truly believe it's going to be more of a deal where they're just going to push the market up and get more bulls and trap you in, and then the collapse is going to happen. And I don't know if it's going to make new lows. I mean, long term, we are in a bearish market. Do not forget we're in a bearish market. If you step back out to the weekly trend, I mean, we've been going down since September. All right, so don't forget that, and don't let these last few weeks of bullish activity trick you into thinking that the market's completely recovered. It could have, but typically we're not going to find out unless it comes back down and retest these lows. And every day it continues to go up. We're getting closer to the time that it's going to turn around. So just be careful. Like I said, I'm not a buyer in here. Now I'll buy individual stocks that trigger. I'll show you one that I missed yesterday that really made me sick. Nvidia yesterday. Remember, my support and resistance lines are drawn in before the week starts. So yesterday, my trade type number 5 would have had me buying Nvidia around 132. So yesterday what happened was they got really bad news, and we identified this area last week. I mean, I didn't show you the chart, but we went over my charts, and I showed you how I put all my blue lines for weekly support the prior week. And yesterday I didn't know about the bad news, and I wasn't around to trade it. I had some meetings and stuff. I'm out of the country on business, so I'm doing that. So I spent my day away from here, and I came back, come to find out they had the really bad news. And had I known we were close to here, I would have had my order already set in to buy. and my exit is somewhere around here, around 147, 148. I would have bought in the video. So there's a trade for you right there. You can see how that would have panned out for me. But I would have been a buyer down here. And because the market gapped all the way down and dropped down here, I wasn't available to take the trade. So I missed this trade too. That would have been an entry. So you can see how that one turns out. See if I was right, wrong, indifferent. But, you know, again, it doesn't matter if you're right or wrong. Being wrong is part of the game. You know, I've been wrong out of 30 times. I've been wrong 13. So, but that's completely irrelevant to being profitable. Control the size of your losses, and, you know, make enough trades that have the odds in your favor, and overall it'll play out in your favor. Just how it works. You're not going to be right, you know, 100% of the time. It's just how it is. But strong money management, tracking your wins and losses, your research, diversifying your strategies, all of this stuff is important, and it's work. So yeah, that's all I have on the matter. We'll see what the market does today. I think we're going sideways, and I don't know. I don't know when we're going to drop, if it's going to drop. And this is just boring for me because I'm not going to buy in here. No matter what happens, I'm not going to buy in here. We'd have to get way over here, or the polarity would have to change. There's a lot of stuff that has to happen. So anything that's happening right now for me is just trickery before the drop. And again, I don't know how far the drop's going to go. It could just be a drop down to here. It could be a retest here. We could go make new lows. I don't know that part. We'll reevaluate that when we get there. But this, it's I guess it's similar to overbought, in my opinion. So be careful out there. So that's where I'm at with it. We'll go live. I'll announce on Twitter when. So make sure you follow me so you'll get the announcement. Sorry for the long video. You guys have a wonderful day, and I'll talk to you real soon.